You.
Oh, okay.
All right. Hi, everyone. Thank you for having me. My name is Lorraine Sellers. I am just here to share some information that I have on financing. The topics today are going to be like basic investing information, and then I'll step into like stocks and options a little bit. And then we'll talk about long-term investing too. So if you have any questions or anything, feel free to ask me or stop me anytime. I will be looking down at my notes. So if you see me looking down, like that's what I'm doing. All right, so first thing we'll talk about is the why and the what. Why we invest, what investing is, and how it can help us to reach our financial goals, short term and long term. Okay, so we invest to allow our money to grow and beat inflation, which is the rapid rises of products, stocks, or excuse me, gas, the products we buy at the store, just the yeah, like when you go into the grocery store, you notice eggs are $2 or $3 higher than they were last month. And if you look years back, you'll see how much the cost of goods has increased. So we use investing to offset those extreme um, price increases, and we use our income to do that. So it's really good because it doesn't require any more of our time or effort. If we learn how to do it correctly, you'll be surprised at how you can maximize your returns. Let's talk about our favorite companies. So the companies that you use every day. I have an iPhone, so Apple would be one. Verizon, if you use them for your phone services, Disney, Nike, the clothes you wear. Most of these major companies are part of the S&P 500, which are 500 of the biggest companies. And they need our money to continue to grow, to make new products, to build new storefronts, real estate. Any ideas they have, they use us investors to fund those products, those new ideas. So when we invest, it's not just for us. We're lending our money to these companies so that they can carry out the goals and ideas that they have for the future. In exchange for our money, they give us a piece of their company. So when I buy Nike stock, I'm essentially buying a piece of the company. So when Nike grows, I get paid. My money goes up. And inversely, if something happens where there's downturns, which are all the time, or if we go into recession, I also would feel the effects of that. So when the stock goes down, my money would go down. Now, the good thing about this is that even if the stock falls, if this is a reputable company, it doesn't matter. I can, as long as I keep my position, the market typically recovers and will go back into a positive direction, which will increase my money. So that's how we make money through investing. Um, yeah, so that would make you an equity holder or a stockholder. You hold a stock of the company, any of the companies. Um, if the company makes $1 billion, I get a piece of that $1 billion. And the good thing about investing in most companies, you can with stocks, you can buy partial shares. So you don't have to buy a full share. Let's say if Tesla is, I think it's $250 a share, and I have $10, I can buy $10 of a share, and I'll have to have a fraction of it. So you don't have to have a whole lot to get started investing, but if you get started, you can accumulate more over time. Which brings me to my next point, um, how to start a habit of investing. So there is this um, false stigma that you need a lot of money to start investing. I actually started with $1 and I was investing $1 a week. And so I started with, I think it was Apple that my first investment was with Apple. And I just started doing $1, $1, $1. And like the growth I started to see, which is called compounding, was like crazy after like 4 years. And I think because we are expecting great returns starting off, we end up not starting at all, which puts us behind and um, makes our money lose value. So the inflation fighter is investing. Before, we used to keep our money under mattresses. Some of us still do digital mattresses, a savings account. And the issue with savings accounts The issues are that they don't grow over time the way they would if you were investing in the stock market. So I think it's like you get 0.01 return on your money, which is nothing like year in, year out. So you can still have your savings account. I recommend putting your emergency fund, which is 3 to 6 months of your expenses starting off, um, in there. So it's a safe way, a safe place to keep your money, and it's liquid, which means if you need to grab it like immediately, you can go to the ATM or the bank and you can get the money out. So there's still value for savings accounts, but it's not meant to use for growth or growing your money over time. Right. Next, we are going to talk about compounding. So if you have, if you're investing $200 a month, and you're at 10% return, let's say you have, let's say you're doing $200 a year that you're investing and you have a 10% return. At the end of that year, you're going to have $220. The following year, if you have another 10% return, the 10% is going to be on the 220, not on the initial 200 that you put in. So now come back around, it's going to be more. And so this is why we continue to put in over time on a monthly basis, on a weekly basis, quarterly, whatever works for you. It's really important to put in over time, because the magic of compounding, which is multiplying the money that you have, that you've placed in, is much higher, the higher amount you have. So even if it's just, I start with $20 and I'm putting in $10 every time I can. I put $10, $10. That $10 adds on, and it generates a higher return because you continue to let it grow. So what I recommend for people who are just starting off, who are maybe discouraged by seeing small returns, is to set your auto investment. So allow it to come out of your account into your individual account regularly. Don't even watch it, just let it keep doing its thing. As long as you're in a good company that's continuing to grow, your money is going to grow like crazy, and you don't have anything to do with it. Like, you don't have to do anything. You don't have to necessarily watch it. Like, that's the good thing about compounding. So I highly recommend just getting started. Just even if you just set it aside, so that when you're ready to put in, when you're ready to start your investment account, you're gonna have something to put in on a regular basis. It also builds discipline, which of course affects like every area of your life. So I highly recommend that. Compounding. And yes. Next, oh, do you have any questions? Or do you want to just continue from here?
Perfect timing.
I know I'm going fast.
No, that
No,
was great. Yeah,
yeah,
Okay.
it is. It's question time.
you
Question
did.
time.
Sorry, you did answer one of the questions because I wanted to know about how do you set it up? Could you set it up automatically? But you came back and said that you do.
Okay.
Okay. Suppose life happens and you say, and say I invest $20, maybe I'm gonna up it up $40, but life happens and I have to pull back because I have a bill, like my student loan, and I'm gonna have to pull back to allocate for that. Can you go back in and reset up your automatic investment and lower the amount? This is a double question. And if so, will that affect what you get at the end of the year? If that makes sense.
Okay. So I'll answer as I understand, and then just let me know if I misunderstood you. Okay.
Okay.
So yes, like I did. So you can, if you are doing 20 or $40 a month and you need to scale back, you can pause it, you can lower the amount. You can control it completely yourself. So if you have an account with Fidelity, then if you're able to do that from your phone, if you have the app, you can set that up on your own. And then if not, you can call the firm and they're able to make that adjustment for you. And that's free as long as you have an account with them.
Okay.
And you can do that as often or as little as you'd like.
Okay.
And then for your second question, will it affect the money that you receive at the end of the year? So ideally, yes, it will, based on how much you put in, but it's not, there's no penalty or anything. It's
Okay.
personalized reoccurrence that you would set up. So they're all going to be different. It's based on your situation, based on your goals, how fast or how much time you have to reach the goals you want. So
Okay.
you can, yeah, but it won't negatively affect it. So if you pause, you're as the company continues to grow, depending on how the year ends, you'll still have, if the stock goes up, you're still going to make money. It's just the rate at which you're making that money will speed up or slow down based on your recurring investment.
Okay. Thank you.
You're welcome.
And
I have a
Carol,
question.
go
Oh,
ahead,
Oh,
sorry.
Angel. No, you're good. Go ahead.
What do you recommend for an entrepreneur, for someone who doesn't work with a company anymore, and you're on
mhm.
your own and you're doing it? So, like, what does that look like? Um, where do you recommend specifically? Like, what do you recommend? Like, the company that I would look into. I kind of understand you with like setting up your amount. So like, hey, once I set up this account, I'm gonna dedicate $20 every week, and then just kind of like letting that build. But what would be the starting point?
Right. So I'm studying for, disclaimer now, I'm studying for my licenses now, so I cannot recommend a product. Thank you. However, as an individual, if you can invest on the business side and or the personal side. So aside from your business angel, you could have your own individual investment account. And then if you have the business, you could have an account under your business as well. And then from there, yeah, I would look into reaching out to a licensed professional to decide like which would work best for your situation. But you can do it on both sides. So like, so I'm not investing under my business, but I do have individual accounts. And then when I left corporate the first time, I that's when I opened my individual accounts. And then from there, honestly though, if you're just looking at like what businesses should I invest in, I would look at the products you use on a daily basis, and then dive into those companies, like studying. And then I can send some study material out for how to choose stocks that you might be interested in investing. And then from there, you just start. You can look back at their, uh, you can go as far back as I think 5 or 10 years to
Mm.
look at their history, how the stock has performed over the past 10 years. I think you can go further back on certain platforms, but a licensed professional will be able to walk you through exactly what's the best account to open up for your business.
Okay, thank you.
You're welcome.
That was that
And
was a good
Carol
question,
placed,
Angel. That was a
yes,
good
it
question.
was.
Yes.
And
I have
Carol placed
when
a
you
comment in the chat.
oh sorry. I stepped over that. Sorry.
That's okay. I was thinking my internet was lagging, so I was trying to get in there where I could. Um, Good places to buy stocks easy, like Cash App, as an example. So if you are,
Oh, okay. I remember you and I talked about this a couple years ago, and I think I went into Cash App, and I think I have one in like Apple, and maybe Beyond, like
Oh,
oh
Beyond Meat.
yeah,
the Beyond, maybe.
Hmm.
But I feel like when I went in there last time, and I have to go look, that my little number was going like this.
Yeah.
And I thought, I'm not putting no more money in none of them. Uh-uh.
Yeah, Beyond Meat was a good COVID stock.
mm,
Hmm.
I guess when people were like staying at home, they were trying to have better or healthier eating options. I don't know what that was, but yeah, Beyond Meat
wow,
was Beyond Meat was one that didn't end up doing so well. They did well for
No,
a while, and then they kind of like
it just
lost.
went.
I don't even think I see them in the stores anymore.
They're still in the stores, but
Oh, are they?
you know who came and took over? Impossible. But Impossible, they don't
mm,
think they have one. Because I've been looking for it. Well, there was a time when I was looking for it, but I've been over here like,
Yeah.
and now we're talking about it. It's like, oh, okay.
Hmm. Yeah.
Would a bank
um,
So,
be another place to go as well? Like
what's that?
Would a bank also be a good place to go to?
So not exactly, not for stock. So your major companies, Vanguard, Charles Schwab, Fidelity.
Okay.
There are some like online ones like I think it's Swan one. I mean, I'm not going to speak it because I'm not sure. But Vanguard, Fidelity, and Charles Schwab are like the three major ones that I would
Okay.
recommend. Learning, I use Fidelity. I work for them, so I'm kind of biased, but I was with them before I started working for them. So I really like it. I like the use of the platform. It's easy to use, and then the customer service is like top notch. So like they're really good. I really like Fidelity. And then as far
Hmm.
as looking, I do my trades on there, but I also use Robinhood, which is crazy. I started on Robinhood when I was just trying to learn it, and
Hmm.
I really like it. But I know people have their opinions about it. So I would definitely do my research. Oh, Shannon said she used Fidelity too and Cash App to practice. Yeah, so I used my mom used Cash App for trading. So you can use it and then they'll send you like tax documents at the end of the year before taxes. So Cash Apps haven't heard anyone have any problems with it, but I still like to recommend the three major ones.
You
Mm.
said Robin Hood, Fidelity, and what was
So I
the other
use
one?
Robinhood, but it's not one that I would necessarily push out. I use it more for looking at charts,
Okay.
but
For a
especially
newbie, I need Fidelity.
Charles Schwab, Vanguard, Fidelity.
Okay.
I'll stick with those three
Oh,
for
is
now.
it
But,
Voyant? Wasn't that one the little bunny rabbits made out of dollar bills?
hmm, not
Voyager,
familiar with that
Voy-
one.
I
Oh
know
What's
what
it?
no.
you're talking about. Voyage, I can't remember.
I know, that's a shame. I know the poor little bunny rabbits on the commercial, but I don't know the name of the company. That's too funny. But, but yeah, those are really good ones that you're
Mhm.
recommending. So you have a history and a good reputation and all that kind of thing. But
Yeah,
I think the thing about
transfer.
Cash App and small places like Robinhood, like you were saying, you can utilize. They have a lot of really good user-friendly tools that help you to kind of get used to like, oh, this is what that means. Oh, this is what that means. And then they kind of go, if you go deeper into their like the rabbit holes that they have, they explain a lot of things. And
Hmm.
so you can get a lot of education there and you can practice and playing around with smaller amounts of money and kind of watching stocks go up or down. And then when you step into something more formal, you feel a lot more educated and a little more supported and you can ask questions of your advisor. So yeah, those they kind of carry the same function, but in different ways, I think.
Yeah. And then I do trading, day trading. So I do my day trading on Robinhood. And then at the end of I kind of do it like as if it's a paycheck. At the end of 2 weeks, whatever money I've made that week, those 2 weeks, I send it over to
Wow,
Fidelity.
that's so cool. That is a smart move. I like that.
Oh, we making
Teach
money.
me,
We
What?
teach
making
me
money.
your
Wait, we getting
You
ways.
paid?
are
We getting our bag?
to be our
Girl.
financer. I mean, from you, because
Lauren, you're hired. I know
I
you
think
said you
I'm.
Love
was
to.
doing the things or whatever,
I
but
know.
girl, you're
I,
hired. Like,
I
I
think
think
I'm
I
gonna.
want to get paid.
I think I'm gonna do Cash
It's
App
really good.
first, since you when you said your mom does. I think I'm gonna start with Cash App, just the
Hmm.
ABC of it, so I can get more knowledgeable in it, and then I'll go the other route. But when you get your license, hopefully soon.
Ma'am. Yes, ma'am. I know I take my test the end of next week. Yeah, the end of next. So I'm so excited. So I was like, this all came at a great time. I'm like, okay, good. How am I learning? How am I
Yeah.
understanding? So as soon as I do, I got you all. And there's a platform they have which is super unique. You can like I could create an account and I could have, for example, you all start with whatever amounts you start with. The same percentage of my account would be the same percentage of yours. It would your account would mirror my trades, which is pretty cool. So instead of being like, oh, do this account now, this one, like when I do a trade or when I start a new position, all of ours would be affected in the same way. It's so nice. Like genius kid from I think he went to
Interesting.
Harvard or something.
Yeah.
So I think that's really unique.
Oh, that is
That's
cool.
awesome.
I do have a question. Oh, I
Oh,
have a question. I a long time ago, and she's still getting residuals from it. when it was Dominion Power, now it's Dominion Energy. I bought some small stock for my
Mm.
daughter. She's still getting, well, you guess so they go up. She's still getting residuals from that. So, and I
Wow.
had forgotten all about that. I had forgotten about that, you know?
Mhm.
Oh,
Yeah,
good.
you get your license because now because I'm thinking I got stuff I need to do this year and I need to have some money.
I
Hmm.
feel you. Is it like dividends she's receiving?
Yes. And it's
Dang.
not, and I thought it would probably be like, when I first saw it, she opened it, I thought it'd be like, $20, $25.
Hmm.
Got one for over $700. My mouth just dropped. Yes. But I got it when she was a baby and I had been I had an allotment set up and it was going there and everything. And I just totally forgot all about it. I did.
That's the best when you forget about it. You come back and you're like, oh, got a
Yeah.
little bit of money
Yeah.
here.
I've heard other people talk about Dominion Energy and getting dividends from their stocks or trade or investments.
Mhm.
Mhm.
Carol, that's our power company out here. They are publicly traded, which I
Okay.
think is kind of strange,
I
but
know. I know.
It's
Why do you think it's
it's also
strange?
solid. I mean, they're not going anywhere and they don't have any competition. So
They're
it's
not
like,
That's
going anywhere.
true.
it
They
seems
don't
I
have.
like it
don't,
would be illegal.
it seems like it. I'm not familiar with it, but now I'm like,
Now you're gonna
dang.
make a little note to herself. She say, wait a minute, hold on, let me get that.
Yeah,
Yeah.
like,
So what y'all saying is I need to look up Dominion. Okay, here we go.
right.
Got
I'll do
it.
the research and get back to you all.
Yes.
All right,
Do
It's,
you know
good.
anything about like lost bonds? Like my grandmother before she passed away, she would always tell me that I had bonds that she bought for me when I was younger,
Mm.
mhm.
and we don't know where they are. She said one day I was playing with them and now they're gone. And she's like, "You're in
Ooh.
your 30s, them things probably worth some money,
Hmm.
Mm.
but I don't even know where to go, what to like. I have no idea." And I think she said the bank that she got them in closed or like got bought out by another company. So I got some money out there somewhere, but I don't know how to find it.
You
I'm
probably,
thinking there should be some way they can check. I'm not
yeah.
familiar with bonds
Mm.
yet. I'm
Okay.
studying it, but I'm not familiar enough to speak on that. But hmm, I would imagine an advisor at an investment company would be able to help you, or even at another bank where you bank now, they might be able to help you with a situation like that. But
Mhm.
that's bizarre. Hopefully they can get your money because they can
Mm.
see whether or not it's been cashed in, right?
I would, yeah, that
I'm
I don't
sure with like
know.
your social and ID.
Mm-hmm.
Mm.
Go to
Mm.
VA. Let me put it in the chat.
Okay.
Mm. Mhm.
VA
She
money
talk about
dot.
them all the time, and I'd be like, "Girl, why you?" So you just try to tell me you lost my money?
That's a good
You
point.
owe me.
I'm
That's
going
a
to put
good
it in the
point
chat
about
that
your
you can go in and
social.
search because
That's what I
I
was
found
thinking too, Shanice.
I'm gonna put it in here. It's called vamoneysearch.gov and you put your name in and some information. I'm gonna put it in the chat because I found out that I had a lot of money left over, like when I closed accounts or when I closed my bank account and I had money left in my savings account, but I never claimed it and it showed up. It showed and it
Oh,
was
okay.
this. I'm gonna put it in the chat for everybody.
Mm.
Thank
Thank
you.
you.
Wow.
I'm sure
I
that's more
know.
common than you think, though.
Yes.
Yeah, I think
Yes.
so.
Time.
But I
Yeah.
like what Lorraine said, how you're doing day trading and like whatever you make from that, and you just
I love that idea.
take that and then you put it. I'm like, girl, that is so.
I think
Yeah.
I could get into that because, I told my daughter, I said, when I get to the point I can't remember anything, I will remember that I have money.
Always remember that. You
Yes.
always remember that.
It might mess with everything else, but when I see my account and I know it's short, I want to know where my
You're
money
gonna
is.
Where is my
I'll come
money?
you're
out
gonna
of that
know.
memory loss real quick. And then
Oh,
I'll
that's
know again once
hilarious.
I get my money.
Ooh, that's funny.
Good though.
We're about to go into round two, but I wanted to say I really liked how you explained the basics because
Hmm.
you said them in a way I hadn't heard before. Um, you said that investing is an inflation fighter. What? I never heard it like phrased like that. That makes
Amazing.
sense. And
Hmm.
then putting your money in like a basic account is a digital mattress. That's pretty powerful when you think about it, because it's just sitting there not doing anything for you really. Um, wow. Okay, so you gave me something.
That's powerful.
Yeah, I teach
Hmm.
little ones, so I'm like, I gotta find ways to like make it make sense to them. They're just kind of like, huh? But it's
Mhm.
yeah, once you like really dive into it, I think there's like it's like such a taboo topic because like
Hmm.
everybody needs money and the prices of everything keeps going up, but our wages are not going up. So it's just this constant like friction of trying to not even live this abundant life. We're just trying to make ends meet. Most people are just trying to, so I'm like, okay, we got to find a way to
I
fight
also
that.
like I also like the way that you said, because to me, I was thinking about it today, and I've been talking to Shannon about it too, because I wanted to invest, but I saw a way, but then my student loan came in, and I was like, dang, I really want to invest. So how can I do that and still have money to take care of all of my other expenses? So I like the way you said and how much you could really start off with. So I can
Hmm.
still consider it, just keep my budget and look where I can pull money out that I'm using it for trivial, things that I really don't need, and start saying no to stuff that I don't really need to. I'd
Yes.
rather invest the money than invest it to something that I'm not going to ever use.
Exactly.
Hmm.
And one nice feature of the Cash App, Joyce, since you say you're interested, you could
Hmm.
do roundups
Okay.
and it'll take your change and it will invest your change.
Okay.
So that's a good example of just money that you might toss in your drawer, your pocketbook,
Yeah.
or whatever sitting in the bottom of your purse.
Okay.
Mhm.
Hmm.
Yes, and
Okay.
it's really good too because I think with Robinhood and most other platforms, they require you to invest at least $1, but that is a good thing about Cash App. I mean, like everything counts, everything. So like,
Mm.
even your spare change can be
Okay.
compounded. But this is what I always say. I'm like zero compounded, no matter what the percentage is always going to be zero,
Mm.
always. And $1 compounded is always going to be more than $1. So like if you just put anything in, like anything, just put it in and then just be consistent and not necessarily consistent with the amount. Because like we were saying earlier, Miss Joyce, like if you maybe this month, I already know I have some stuff coming out, or I already know like we're planning a vacation. And so instead of like the vacation coming and then I have to pull from something that may be going to another bill, I'll start putting aside now for that, which means my investment might have to be lower this month.
Okay.
Like I think the cool thing is there's no rules to it. You do what you want to do, what works for you. And then if you find something doesn't, then you move on to the next thing that might work.
Okay. This is good.
Oh,
This
E-Trade was the other one, Angel. Vanguard, E-Trade,
Mm.
Fidelity, and Charles Schwab. That's another one that's pretty popular. Um,
E-Trade, okay.
mhm.
Okay, I'm gonna put you
So,
back on the stage, Lorraine.
okay,
All
back on the stage. Okay, so next, let's talk about where we can put our money. So, I call these containers for wealth. We have individual brokerage accounts and we have um, investment accounts. That's the two we'll talk about today. The individual brokerage accounts, which I was speaking to you, Angel, they're your standard accounts. So these are like your like I would liken them to like a bank, like a checking account. So this is where you can do your regular trading. It's pretty easy to send the money out, which the bank would be taking it out, withdrawing. You can send it to your bank account if you need it. You can send it to an investment or excuse me, a retirement account if that's what you want to do. So there are different ways you can use the money in that account, and the rules are some to none. In this account, this is where I send money from my day trading. So Monday through Friday, I'm doing my trading. I'm doing my trading. At the end of the 2 weeks, I see how much money I've made, and it's like, okay, a percentage of this I'm going to send to my individual account. It's very easy to put the money in. It's easy to take it out. I think taking it out might take like a business day or two, but if you want it immediately, a lot of places will allow you to send it back to your account for a fee, a percentage of the money. But if you can wait, they'll send it right to your account typically no issues sent to your bank account. Um, you pay taxes on your gains or profits in the year that you sell. So if you, let's say you have money in this individual account, you'll have the money held in a security, a stock. You may have $25 in Apple, $500 in Tesla, $25 in Microsoft. The money is held in these securities. So you are owning part of this stock. If you choose to hold long term, you won't have to worry about any taxes until you sell. If you buy today, Microsoft, and Microsoft is $20, and they have a launch of a new product or operating system that sends the stock price up, like from $20 to like, not ideal, but $100 per stock, you're going to see a significant increase in your money. This might be a good time for you to be like, I'm just going to sell it now because I've made such a return. I already know it's so much of an increase in price. It's probably not going to go up much further in such a short time frame. So it may start coming back down. If you're going to need the money pretty soon, you may sell it, take your profit. It just sits in the investment account, but outside of that security. When you sell, when you make that sell, the difference between the amount you put in and the amount you made, that's what you're going to, or excuse me, the profit, that's the money that you're going to pay taxes on. But the brokerage firms will send you the documents for taxes, but you will pay taxes on the gain. And then if you lost money in, like let's say it was $20 and it's like beyond meat and it's just continuing to go down, like plummeting fast, and the company's not doing too well, like you're looking at the news and it looks like it's maybe going out of business, and you just don't have conviction in that company to recover or do better, you may take your money out. Even though you've lost quite a bit, you don't want to lose all of it. So you'll take your money out. Now you've incurred a loss because the amount you put in, you're taking out even less than that. And then your taxes will be adjusted accordingly, depending on if you made money or lost money. So that's an individual account. Within these individual accounts, you can day trade in them too. I don't, it's just personal for me. I prefer another platform. I prefer the interface of Robinhood. So I do my trading over there and then I send it to my individual account. And I have long-term holdings. I don't plan on selling for another 15, 20, 25 years. So I'm not going to pay taxes on those until I sell. So I'm not concerned about that right now. So that is the individual accounts. Does that make sense? Any questions in the chat? We good? Okay. The next type of account we're going to talk about are your retirement accounts. So these are accounts that you're not withdrawing anytime soon. So you're putting your money in those on a regular basis. If you have a 401k with your company, or you have your IRA accounts, your traditional IRA, or your Roth IRA, or your individual retirement accounts, those accounts you won't, I think it's 59 and a half, you won't be able to take out until then. If you do decide you need the money for something else, there will be a penalty and you'll have to pay taxes on those. And I'm not exactly sure what the penalty percentage is, but those accounts are harder to take your money out of because of the stipulations they have on it. In these accounts, you can also do your trading, you can do your long-term holdings, and you can trade within the account. You just can't take it out of the account to use until you've reached the age. So those retirement accounts. Talk of the long-term wealth, the Roth IRA is one of the beginner ones that are pretty easy to get started. So you put your money in that has already been taxed, so income. And the growth and withdrawals that happen after the age of 59 are 100% tax-free. So let's say I put money into my Roth IRA and I put it into a security that grows like exponentially, and I have a very, very high return. I only had to pay taxes on the money that I put in. So if I put $100 in and it grew to a million, I'm only taxed on the $100. And when I'm 59 and a half and I decide to withdraw the money, I take out the 1 million with no tax, like none at all. No strings attached, no nothing. As long as you wait until 59 and a half to withdraw the money, it's yours. People really like that one if they, excuse me, if they're skilled in trading or have an advisor that really helps them to grow their money. Because if you put a small amount in and you're able to grow any amount, it doesn't matter the amount you put in. And then the money just continues to grow and then you take it out tax free. That's pretty amazing. Yeah, so that is a good thing about Roth IRAs. Traditional IRAs are a little different. You are not taxed on the money you put in. So you can invest as much as you'd like, that's fine. But then when you take the money out at 59 and a half, you're taxed on that. So it's pretty much, it's a preference of which one. Some people, I have both. And I think I prefer the Roth just because I do know how to grow the money. And I just think at 59 and a half, when I take it out, I won't have to worry about paying taxes on that, which is great because, when you retire, you may not be working full time. So you just want to enjoy doing what you want to do in life if you've been working doing what your company wants you to do. So now you have the money to enjoy your life. You don't have to pay taxes on it. That's traditional and Roth IRAs. Any questions on those? Okay. Any questions in the chat? No. All right. We'll move on to risks and rewards. The goal is to understand ownership. So when you buy and sell stock, when you buy stocks, you're considered a common shareholder or a stockholder. And you have two main ways that you can profit. So capital gains, that's when the stock price goes up. So if you've bought into a stock at $10 and the stock goes up to $30, your $20 is your capital gain. That's the way to make money. The other way is if you talked about dividends. So that's when the company sends you money just for owning their stock, like a reward. Now, the companies that pay dividends typically don't have increases as high as some of the companies that don't pay dividends. So essentially, I think they kind of balance each other out. So like dividends are good, but you also want to look at the return on your investment over the course of how long you choose to hold the stock. But the dividends are paid out. You have some that pay monthly, you have some that pay quarterly, and that is another way to own part of the company. They pay dividends out. Companies also have the choice to stop giving out dividends. So there are some companies that 20 and 30 years ago, they paid out dividends, but now they decided to hold on to the dividends. They don't pay them out anymore. But maybe their stock is doing better. So their shareholders are still making good money, but they're just not getting that payout from the company. And then the last thing I'll say on this one is when you are a common stockholder, you have the right to vote. So when you own part of the company as a common shareholder, the company will have also like meetings where they will allow their common shareholders to vote on who runs the company, and they'll explain the goals they have for the company going forward, who's going to be running the company, what ideas they have, what they stand for, their values. Like you'll get to make or have a say in who's going to be continuing to run the company that you're buying stock in. If, let's say, they're changing owners and you're not a fan of who is currently or who's going to be in power next, you have a right to put in that that's not who you want to run the company. And then the shareholders overall, they'll decide what's going to happen next. If a lot of people, if they don't care for the person that's going next, they'll remove their money out of the stock to find another one. Pretty interesting. So that's a right that common shareholders have. you have a say in the company because you own part of the company. And of course, stocks are volatile, they go up and down. So to manage this, people diversify. So they don't put all of their money into one stock. So they'll put money into the tech space. Maybe they'll put money into the finance space to make sure, like if one industry is doing poorly at a time, they'll have another industry that may offset it instead of putting everything into one, like in putting everything into Tesla. Maybe you'll put some into Tesla, some into Nvidia, some into Microsoft, just to keep their money from all going down at one time if things go bad, and then to give them more opportunity to make money. That is the question.
Awesome. Do we have any questions? It's a great time for some questions.
Okay, I have a question. So I was looking at, and I haven't looked at this in a while.
Mm-hmm.
So as you were talking, I was like, oh, let me just go in here and see what's going on real quick. Because I have two in Cash App. So it made sense what you were talking about with the gain. Because with Apple, it looks like I invested 10, and then I see on over to the right, it says gain $6.55.
Mm-hmm.
So that makes sense. My question is, so with the Beyond, it says my investment was 28,
Mm-hmm.
and then the loss was 27. So then
Okay.
I scrolled down and it says this thing is really neat because then it tells you like analyst options. So like moderate sell. Right now it says moderate sell, hold and buy. So the question is, do I need to let this one go? Do I need to be like goodbye and go somewhere else?
Is that beyond?
Uh-huh.
I can't make recommendations. However, I highly recommend on following what you feel.
Choice.
I see what you did there.
See what you
Yeah.
did there?
Hmm.
That was smooth. That was real good.
I'm picking up
Yeah.
what you putting down.
Because
Mhm.
the thing about investing, it's just like every other thing. Like you'll know when something isn't right. And then you'll know when you're reacting out of fear. Like you'll know the difference because like you've lived with yourself, you know what I mean? Like you know those feelings internally. And you can always do your research too, because you'll know the companies that you're hearing about on a regular basis. For me, those are the companies that I go with. That's just me. I don't do too much like, well, I'll say actually with AI and ChatGPT, I kind of did dive into that space before I knew a whole lot about it. But for things that I'm not sure about and I haven't heard much about, I kind of go with what I think internally to make my decisions on investing.
One
I'm
of the
picking up
things
what
I,
you're putting down
I
because one of the ones I heard you say quite a
mhm,
few times, you've mentioned Apple, you've mentioned Tesla, and you've mentioned Microsoft. So I was
mhm.
like, let
Out
me
of
go over
Tesla,
here.
I was in Tesla. Or no, I'm not saying I'm out of Tesla for my day trades. I have long-term portfolio in Tesla. I'm kind of letting it ride out, but I do believe in the company. I think that's my biggest thing. So I will be holding that like long term. I am not necessarily putting any more in it. I'm kind of letting like what I have. That's another thing. So once I get to a certain number of shares, and it's different on different companies, I won't put any more in there. Like I'll let it grow because it'll compound if it's a good company. If for whatever reason a company, I'm not putting my mouth on any company, if for whatever reason a company has like prime example, Apple. After Steve Jobs, Apple took a huge dip, but then it like went up. So it's like super crazy. So like I did end up taking some out of Apple just out of fear. But then like the more I studied it and like paid attention to the news, I also recommend like watch finance news stuff, like look online, watch stuff on the TV. They will talk about stuff and they'll kind of give you an insight on what is a good idea, what a good action is to take. on a certain security, even as far as even as far as how you react to the market.
Mhm.
Like the fear, that'll mess you up every time. But if you're sound in it, like I believe in this company, I have conviction in it, I know it's going down, but I believe it's going to go back up. Like you can go with that. And until something tells you otherwise, whether an advisor or someone you trust, I would hold tight to my conviction because you'll literally be jumping from stock to stock. You won't make any money if you keep pulling out of fear. At the same time, if you're continually putting in securities that are, not doing well, not performing well, then that's a sign to you that you need to like slow down before you put any more money out. You need to do your research or talk to a professional. Because even though, I recommend investing money that you could stand losing, if I can say that, even though I do recommend that, we're not trying to lose money.
Mhm.
Like we worked hard for our dollars. So we're trying to grow them, yes, but we're not trying to blow money, trying to figure it out. And they have paper trading too now, or like you don't have to use your own money. You can use it's like a it's like a simulation of the actual stock market. So it's up to date and everything. And you'll make a trade as if it's your own money, but you don't lose money. So you'll see how you're progressing in learning the stock market and your conviction, except you don't lose money, which I did not do. And I lost a lot of money before learning how to do it. So I recommend strongly if you're interested in day trading to start with paper trading.
Mm.
Hmm.
One of the things I enjoyed about Cash App was that they have articles along the ticker, I think, where what's going on with the stock today, and then underneath it'll
Mhm.
have articles from like the Financial Times or BBC or whatever, anything that company might be in the news about, and they will just string them along, and so you can actually go back and read some articles about like historical, like what's been happening with them over the last 2 weeks or last 6 months or whatever, or where they're going, where they think they're going. And you can watch the stock go as the news goes out. And so you don't have to go
Yes.
doing all that research like on your own, figuring out where are these places that tell these stories. They'll present a lot of those articles with the stocks under the stock's name. So that's really, really super helpful to get intelligent about.
And it's like quick if you watch it go on the screen. Like
Yeah.
I'd imagine that's what it's like on Wall Street, where it's just like the ticker.
Yes.
It's really interesting.
It
You'll
is.
become a nerd. Like if you start getting interested in it, you just be talking about people like, what are you talking about? But it's so
Yeah.
interesting. And then making money is interesting. So
For real.
Absolutely.
yeah.
Absolutely.
Joyce has her digital hand raised.
Um,
Yay.
I
Show
was
digital
listening
hand
to you when
sign.
you were talking about retirement, because I have
Mhm.
retirement money for my 401 when I retired. So now the federal government has decided that when you turn a certain age, you have to um,
Take
take a
distribution.
minimal distribution out.
Mhm.
And that's why I'm really trying to focus on my money now, because when they sent me that letter last year, I was like, what do you mean take money out of my IRA? But if you don't, then they're going to penalize you for it. And they give you a certain amount that you have to take out. It's when you're 70 and over, 70 and over. No, it had to be 70 and over because it shall be 73. So I just received this and I'm going to talk to them because I do have savings money market. I have a certificate and I have my two IRAs. And they give you in the percentage that you need to take out. And I was looking at it while you were talking, which I think is crazy. It's my money and you give it, but you take it all back. So
Mm.
I'm trying to decide how I got to take it out, but I was thinking maybe I should put it in some in my certificate and then use the rest to maybe venture into getting some stock because I got to take it out. I
Right.
have to. So when you said that, that's why when I was looking at it, because when you call somebody, sometimes they'll be talking so fast, you're trying to figure out what, all I want to
Yes.
know is what can I do with my money? Because I have to take it out. And it's not a little bit of money either. It's quite a bit. So when you were talking, I'm like, yeah, maybe I can do that, put it in my certificate, and then take some and invest it. Start off with that a little bit because
Okay.
eventually they're going to try to take it all anyway. But if I
Unfortunately.
reinvest it in some stocks and stuff, I'll get my money back and maybe double. So when you were saying, see, you made sense. When I went to the bank, I couldn't grasp it.
Yeah, and I know they're in a rush sometimes, just
Yeah.
getting on to the next one. I wrote this down and I will check with my advisor about that because I'm curious
Okay.
about it too, what your options are.
Okay. Thank you.
I will get back to you next week, hopefully Tuesday. I'll reach out on Monday.
That'll be good because
Yes.
I know they give you a deadline too. They don't give you a month or 2 months to think about it. They give you a
Oh,
deadline. Yeah,
yes. Is you haven't met yours yet though, right? Have you reached your deadline? We don't
it's
have to say
coming
it
up
on.
next month. Next month.
Okay.
Mm.
Yeah.
I'll get back to you before then to see
Okay.
what
Thank
your
you.
options are. Yes,
Uh,
because there's always ways to make sure you can still have your money how you'd like it.
okay.
So
Thank
we're
you.
gonna figure that out. You're welcome. It's just like them though. It's like them to have force you to take your money.
All those many years and now I done put it in there to get funds up and then I gotta take it. They're gonna
That's the
take
problem. They're like, she's growing too fast. Yay, I'm so excited.
Any other questions? I feel like I had one, but I lost it.
Oh, that's how it is.
Yep, it went out of my head. Angel, you have another question? No? I wish I could remember what it was. Oh my goodness.
can I put my email address in the chat so you can get it?
Please, if you all, I'm going to transfer it to a worksheet that I would like to send out too. So if you could, if you're comfortable putting your email address,
Yes.
and then I can send it to all of you.
Thank you.
You're welcome.
I just want to say this is really good. Not only did I learn something about investing in stocks, and then I learned how to set up a budget so I can see where my money is going. This has been an awesome day. And it's
Yeah,
cloudy outside, and it's been an awesome day. When you talk about money, I get excited because I work hard for my money.
exactly. It was like perfect like order too. So you had like the budgeting, and then once you're
Mhm.
everything budgeted, now you know how much you can allocate to investing.
Yeah, it falls right in place. So thank you. And you're really good. You really are. You
Thank
explain it and
you.
it makes sense. There's not a lot of jargon and all that stuff. You just break it
Yes,
down so easy. So
excellent.
thank you for that. Thank
Thank
you.
you for having me. Yes, this has been awesome.
Absolutely.